Welcome back, everyone. I'm Severino, your personal business coach. And what I found today, I've never heard anybody speaking about. So let's jump in. This one is important because nobody's talking about it. You will only find the stock analysis here of this stock. And it's made it past all the hoops into my top assets. So let me share with you that today we talk assets. If you're new to the channel, I'm a marketing and sales coach. We optimize your marketing and your sales on this channel, but also with all that money, what do you do with that money? We are learning also to keep the money that we're making. And I am running my portfolio on a public fashion so that you can cut the time for your research and you can learn from my mistakes and from my winnings. So the current portfolio is $1,075,000. The plan is to double every 3.8 years. We are now in 2024. We are at $1 million. We are on track. We want to double again in 2028, minus some lifestyle chips that I will take out. But that's the plan. Do you think we can make it? Let me know in the comment. Target portfolio is a portfolio from now on that is only capital light businesses that own data and have the pricing power to leverage that data. Today I'm sharing one of those, and I'm really surprised that nobody on the planet is talking about them. Ticker symbol ICE. It's the Intercontinental Exchange. Ever heard about it? Let me know in the comment. Most of you will say, it's the first time that I ever hear about this. What is this thing? So it's behind the scenes. Their competitors are the CME Group, the Nasdaq, the Deutsche Börse Group. It's not something that retail is passionate about, like Tesla or Apple. It's behind the scenes, very silent, but it's a compounding machine. It is stronger than their competitors in very specific things. So it's stronger in energy and in commodities. So it holds a dominant position in energy and commodities derivatives, particularly in energy benchmarks like Brent crude oil, natural gas, and power futures. These contracts are essential for global price discovery and risk management in these critical markets. You need that data. They're stronger in European bond trading and European fixed income after they have bought Euronext, giving it an edge over rivals that are more focused on North America. They are now also quite intensely focused on Europe. They take data very seriously. They have been strategically investing in data and technology solutions as a key driver to their growth, recognizing the increasing demand for market data, analytics, and risk management tools. And that's our main thesis of our portfolio. Data is the new oil. So they think along those lines. So they did qualify in terms of recurring revenue. They have all recurring revenue, and that is a higher margin, differentiating from rivals that are more reliant on trading volumes. And trading volumes are cyclical. For example, in August, they're down. Selling may go away, so there is a summer gap. I guess there is also a winter gap during holidays. But they have a recurring revenue, so there is less volatility and more predictability. Let's run them through a screener. Data owner, yes. Pricing power, yes. Network effect, yes. Capital light, yes. High switching costs, yes. Now let's look at the numbers. We want to see the free cash flow per share increasing over the last 10 years, operating income increasing over the last 10 years, and return on capital employed increasing over the last 10 years. Can they give that to us? Boom. Here is Intercontinental Exchange with a free cash flow per share, which is just immaculately growing over the last 10 years. We have operating income immaculately growing over the last 10 years in sync with the first metric. And there is one glitch. That glitch is from 2019 to 2023. The return on capital employed has been plummeting. Maybe that's why nobody's talking about it, because it looked like a losing story here. Maybe this was the acquisition of Euronext. I don't know exactly yet. I don't own them, but I will find out, guys. And the good news is December 23 from 224, you see an uptick. So even the only metric that was negative over the last years is right now accelerating up. Let's look at the GF score, 87, which is lower, and I understand now because with that one metric plummeting, the GF score had to be lower, but it was all the time very high in profitability, in momentum, and in growth. Now, they are modestly overvalued because their fair value is 118 and now they are above that. Q1 2024, we had only 74.9 million inflows from super investors. That's almost nothing. That's really peanuts for those 6 super investors: Sense Capital, Katie Wood, Paul Tudor Jones, Joel Greenblatt, Jim Simons, and Daniel Loeb. That's less than 0.2% of their portfolio each. It is nothing. It's peanuts. So super investors don't love ICE. They had it in their portfolio, they did buy, but tiny amounts. So they don't have a high convictions, but they're in. And the reason why I look at super investors is they have big teams of analysts. They can do the due diligence that I cannot do from here, from my home, with limited resources. So if the fact alone that they passed their analyst sim and their due diligence process, that's the validation that I need. The rest is risk on me. I hope this helps you take your financial decisions and keep rolling.